Kim here, and welcome to the market update. Hope you guys had a good week trading this week. Today we're going to be looking at Diamond, Spider, IWM, Qs, and XLF. Pretty much just all the tickers we watched last week, and let's follow up today and see how they played out. Today's the last day of trading in September, right? And then we got October 1st trading next month, and so time is flying here. We're getting into the winter time. Things are getting chillier, and you know, I hear a lot. I've been hearing a lot about how October is more of a bearish season and seasonality wise, and that wasn't the case in October. You can see in October last year, right there, October. We had actually very bullish October month last month, as you can see right there. That's October right here to here on the Dow. And then November, December. And a lot of people, I remember saying that. I remember when I was trading back in, summer of 2017, a lot of people saying that before the November, December move, we're going to see a steep decline first before making a move, and obviously market followed the majority. What I'm saying is, I'm not saying that that's exactly what's going to happen this year. What I'm saying that seasonality, I do think it's a good perspective. It's a good kind of a reference point to see how we played out in the past. We cannot always be relied on them. Just because seasonality says that October is going to be a volatile month doesn't mean I'm going to start closing out everything and then kind of waiting for the volatility to kind of go away before getting back long. I mean, if you try to avoid every single volatility in this market, you're not going to be able to make any money, because if you did try to do that back last year, well, you missed out on one of the most biggest bullish move we've seen in 30 years. I mean it, 30 years. Here, let me prove that to you right here. We go here. This is 2017. Here, let's go to SPY. Right there. You see that? This is 2017, right? We haven't seen a buying pressure like that in 30 years. This is 1996. You can see almost 30 years, right? So if you were so concerned about market seasonality, well, you know, you missed out on the biggest move that we've seen in 30 years. Again, I mean, you know, if your whole objective is to be defensive, then I guess you could kind of play into it. But I'm not going to start being fearful about it. I want to see how the market behaves first. So let's start with the Dow Jones first here. You can see since the last week, I haven't touched this chart since last Friday. You can see that we did see a gap up and we filled that gap. So let's do a little bit of maintenance here. Let's get rid of that and put this up at 267 with the recent high, swing high. And you can tighten this a little bit. Let's tighten this a little bit here. You can see that we can tighten it a little bit. So you can see we're kind of trying to hit this prior resistance, new support vicinity. Here's a fun fact here. On the Dow, we have not yet retested 20 EMA. You know what? I'm going to actually do this here as well. We are actually nowhere near 20 EMA. That's the 20 EMA that we've been talking about on Spider. Spider, we're near the 20. Do you see that? We're 20 here, 20 there, 20 here, 20 being acting as support. We're near that level. However, on the Dow, we've seen relative strength last couple weeks. We're actually kind of a little bit far away from the 20 MA. That's showing that this buying pressure was obviously we've seen some relative strength there versus S&P. So we're trying to hold this level. I tighten it a little bit just to accommodate recent price action there. We got this rising uptrend support in that vicinity. Let's loosen that up a little bit just because we have a 20 MA in that vicinity. And then the gap area 261. So I think this vicinity is going to act as a pretty strong support in the minor term. And let's see how that plays. I think we're starting to get a little bit extended on the weekly here. Let me show you a little bit. If I go to weekly on this up, you can see right there, we got a little bit of room here, but you can see we're kind of getting in that vicinity in that week. We got a little bit of room here, but doesn't mean just because we hit there doesn't mean it can't go higher. But again, this being weekly chart, we could go up for a couple more weeks, but we got a little bit of room here. We're getting into the vicinity though. of extended levels. Obviously, we just broken out of this 8 months consolidation. We may need to see some kind of a digestion or a little bit of pullback. I don't know. We may move sideways before going higher. We may continue to grind higher with some ups and downs, or we may see a pullback. At this point, nobody knows. But what I wanna say is we have just broken out of we have just broken out of this 8-month consolidation, and we are seeing that weekly 20 MA is rising. When you see weekly 20 MA rising like this, you want to give benefit of the doubt to the buyers in the primary term. It's gonna see its ups and downs. You see these ups and downs, but the primary term trend gets higher, and we see it in 2017 how such a big move like that. I don't know we're going to see something like that again. We probably not going to, right? But as long as we get into an uptrend with higher lows and higher highs, and somebody like me as a position trader and active investor, I can able to profit from it very well here. So in the minor term though, we got some of these levels you can watch next week, and we'll follow up on next Friday. We'll go from there. Let's actually get rid of this here, because we feel that gap. I want to get rid of a lot of these lines here. So we're still, unlike diamond, spider's actually still bound by this channel. Remember we talked about a diamond, we have broken out of this here. Here I can do this. See that right there? Like that. You see that's a channel type. Sometimes you can look at this as a trap. So we've broken out of this channel, these channel right there, and then we're retesting it on the Dow. Well, on the S&P, we're still bound by this channel here, right? We're just actually still below it. Good news is we're still in an uptrend, and we are holding 20 MA here. Bad news is we have daily bearish divergence. I tweeted it out. I don't know, yesterday or something like that. Day before yesterday, I think, or 2 days ago. We have this bearish divergence there. And something about this bearish divergence is this is not the end of the world, but then I think it could make things hectic. You know what I mean? It could continue to grind higher like that. I mean, I'm not sure exactly how things are going to play out. I think it's gonna make the market kind of choppy. We might not have to get a traction right away. This could kind of make it, like a little bit hectic here for the bulls. We may or may not pull back and maybe retest the new all-time high and the gap area again. And that might be a possibility where we might even do something like this, just so the market wants to shake everybody out, where you can see like there. And then now that's the market just love to playing up, doing some shows here. You can see the left shoulder, head, and right shoulder, and then everybody's gonna be watching this support line. And if market really want to make the headline and just make everybody freak out, just get slightly below it and everybody start freaking out, and then that would be kind of a epic trap there. And I wouldn't mind. I mean, I wouldn't be surprised to see some like that, because market likes to do that at the all-time high levels. Always at these levels like to grind a little bit, because there's a lot of anticipation after breaking new all-time high. A lot of people are saying, well, is this going to be a flop? Is this going to be kind of a head fake before this thing crashing, right? And then so what this could do is something like this and do a little bit of head and shoulder formation. A lot of people are going to be so attached to this, and they're like, oh, look at this head and shoulder formation, man. And then they're going to say, oh, look at this rising uptrend support, man. And then we break lower. Oh my God, all hell's going to break loose. You know what I'm going to do? I'm going to be buying this dip, and then this thing's going to do something like that. I think it's a scenario. I don't know if that's exactly what's going to happen, but keep in mind. But as of now, as of today, 20 MA is in that vicinity. 50 MA is here, 100 SMA here. So I think 3 key moving averages you want to watch is the 20 and the 50 and the 100. The worst case scenario is 100. I don't believe this thing going any lower than 100 this year. 100 will be the worst case scenario. 50 is a likely level, I think. And then 20, if we do hold it, it could grind higher, right? So it's pretty simple, pretty fair, right? Let's go to IWM. I tweeted out that, hey, I don't mind seeing this thing breaking lower, just shaking some people out. We're just right on the 50 there, and then we got the 100 there. And everybody's watching this rising uptrend support, this thing breaking lower. Do you know what really happened though? Looking at things more of like an intermediate term. Well, a lot of people, when this thing was grinding like this in early 2018, you know, a lot of people are still very, very shaky, and they're very fearful and pessimistic about the market. So they really didn't buy this dip, or they really didn't want to go long. So then we had this big, smooth, swift breakout move. And then a lot of people who didn't participate in this move, now they're saying, you know what, I'm going to chase this thing. So they chase it up here, and the market is just punishing them. You know what I mean? So this is kind of what I'm saying. The market kind of knows exactly what most people are thinking, and its job is to do the opposite and make sure as many traders are aggravated and irritated and make their life hell. That's market's job. That's what market does. This is why, you know, all these traders, man, on social media just always just so insecure about every little thing. But I think obviously long-term trend is up, but I mean, I think a little shakeout is not a bad deal. 100 SMA is in that vicinity, I think. I think the worst case scenario maybe it may retest somewhere here, but I don't see this thing going any lower than 163.4-ish. I think that would be the worst case scenario, and then maybe throw a head and shoulder formation like that and just shaking a lot of people out before possibly going high. I'm just going too ahead of myself, but that's a potential scenario. I think Russell 2000 is much more room to move to the upside, but I think before we do that, a little bit of shakeout in this vicinity might be in store. We got a little bit of gap here that is coinciding with the 100 SMA. That probably going to act as short-term support if we do come down here. So we're currently below this rising uptrend support, which probably everybody's looking at. And so it'll be interesting to see how it plays out. So let's see, we got the 100 gap area, worst case scenario, 162.3-ish level. If it does come down level, I may be thinking about buying more there in that vicinity. Let's go to the Qs. Qs actually still kind of holding this rising uptrend support slash channel type of move here. And I loosened this a little bit here. You can see if you are too tight with these, if you're too uptight and fixated with these supports, you would think many people thought that this was the break getting lower, but you can always be a little bit more lenient with these trend lines. Don't be so uptight with it. Don't choke your positions. Let it like wiggle around. And let's do a little bit of this just so we can gauge the short-term movement here. You can see prior resistance, new support. We also got a gap there. Let's actually remove that. 177, 175 was a level that if this was going to break lower, that I was going to buy more. But that it never did that, and we got this gap, right? We got this gap right there. It's still open as of today, and so as long as this gaps are open in the minor term, I want to give benefit of the doubt to the buyers, and this thing probably gonna go back up and retest it. And Nasdaq still leading entire market here with almost 20% already, and so many shorts were just dumbfounded at this point. You know, they thought that for sure this thing was going to crash here, for sure it's going to crash there, for sure it's going to crash there, for sure it's going to crash there. But this thing continues to move higher. I think my next target is around 94, 200-ish. We're probably going to see some steep decline in that vicinity, but we'll track of that and continue to we'll follow up on it next week. One last one, XLF, we'll call it a day with this one. So XLF finally broke out of it, but then making sure that the market is going to chase or punish some of those chasers who's chasing here. So we had this consolidation, but looks like we're coming right back in here. We actually do have this there, rising pivot. And this gap, and then we got this gap down. A lot of times when market gaps down after steep decline, you can kind of look at that as potentially exhaustion gap. So this is kind of an island. Currently have the island there, but potentially exhaustion. Potentially, we don't know that. If we gap it right back up, there will be island. Sometimes we see a lot of that happening. We saw a lot of that happening this year. We also saw a lot of that happening last year where it gaps back and forth several times. So look like an island bottom or island top, and then it became an island bottom. So if we gap it up, let's say on Monday, this could become an island bottom there. So we're currently holding the 100 SMA coinciding with what? 50% retracement, and that's a prior support. So what bears don't want to see is a gap up on Monday. If this thing gaps up, that will be an island bottom reversal. We're currently holding this support. Let's see if we can hold that. We still kind of looks like an inverted head and shoulders here. So potentially that's kind of what is playing out. We got the left shoulder, head, right? And then a right shoulder, right? And this might be the, you know, some kind of a neckline, or this is a neckline obviously, but you can call this headline if you want. But a shoulder line, let's call this a shoulder line, right? Neckline here, shoulder line there, right? It's pretty symmetrical. Potentially we hang around here for a little bit before breaking out. I do believe that XLF is going to follow the indices, Diamond, Spider, IWM Qs, and make new all-time high. And that I am bullish on the long term. I've been buying the dips down here, and I am holding full. And so some of those targets are 31.57. So let's see if this becomes some kind of island reversal back to back, or some kind of exhaustion gap, right? Everybody's panicking here. I look at this more of an opportunity type of deal. So we'll see how that plays out. We'll go from there, right? Well, I'll talk to you guys next week and we'll follow up. You guys have a wonderful weekend and good luck trading next week.